Hello, joining me today in studio is Brock Campbell, Global Head of Research and Portfolio Manager at BNY Investments. Brock, thank you for being here.
My pleasure.
We're very glad to have you. So I want to dive right in. With inflation, geopolitical uncertainty, we have a lot of stuff going on in the world. We also have equity market concentration at the moment. So where does global infrastructure fit into a diversified portfolio today, and what role can it play alongside traditional stock bond allocation?
Yeah. So infrastructure sits, I like to call it the kitchen table fund. And why is a kitchen table? When I go home and talk to my parents, I go down to their kitchen table and what kind of fund do they want? They want something that's going to protect them. It's going to provide downside protection. They want something that has inflation protection, and they want some capital appreciation. So when we talk to our clients, it's amazing. I actually asked them this question. So I become quite good at listening and understanding. So if you think of your allocations, right, from your most conservative to your most volatile, infrastructure sits right in the middle. It's like a 60-40. And why is that? Well, when you build an infrastructure asset, when you build a power line, you're essentially putting steel in the ground, and you have an agreement to earn consistent and repeatable cash flows for a duration of decades. And that is just like a bond, right? When you get a bond, you're going to get that coupon. So infrastructure actually acts like a bond. However, it also has inflation protection. So when I build an asset, the government says, hey, Brock, you can earn this amount of capital on this asset, and we're going to protect you from inflation. So if prices go up, labor goes up, we can push it right on to the consumer. So that's an unbelievable moat. And then the last thing that we're excited about, obviously, it's the sizzle on the steak. It's artificial intelligence, it's aging demographics, it's deglobalization, it's electrification. Like, there's never been this many themes driving infrastructure higher than what we see today. So we believe it's a very attractive time for clients to put it in their portfolios.
And you kind of answered my next question, which was why specifically now is this so compelling? Infrastructure, like you said, everyone kind of understands it, but not really. So you have AI, but what could make this opportunity set attractive, not only right now, but over the next several years?
Yeah, so the duration of this build out is going to be immense. I mean, I think the market gets so short term. Just look at the start of the year, right? Who would have thought memory and hardware would have ripped the way it did and then come off the way it did? That is not infrastructure. Infrastructure is like turning a battleship. I mean, think about siting a power plant. It takes 3 years, takes 2 years to build it. And that's if you can get everything lined up perfectly. Like, these are slow moving businesses. That's why we believe it has a really long duration. Oh, by the way, you have blank check companies supporting them, Amazon, Microsoft, Google. Like, these people have so much money they don't know what to do with. And what the one thing they need electrons for their business to survive. And I do think AI is a critical win for these businesses. They need to get electrons to power those data centers. And that's where the infrastructure comes in.
Brock, a lot of people associate infrastructure with bridges, tolls, the traditional things, but they kind of leave out social infrastructure. What exactly is this, and where does it fit in?
Yeah, other characteristics for infrastructure is boring. It's slow moving. Trust me, my whole life I've been in the slow lane, right? Until, our friend Sam Altman came along and invented ChatGPT, and now we're off to the races. But, we look at the world a little different. Most investors in the infrastructure space focus on those asset classes that you talked about: utilities, toll roads, bridges, energy pipelines. Absolutely infrastructure. But you know what? We like to have a broader lens, right? We like to look out and find other areas that have those attributes, have that downside protection, income generation. And what's one area? Senior housing. This is an unbelievable thematic opportunity. We're all getting older, which is a great reality. It's a painful reality some mornings, right, when you wake up. But the fact of the matter is, we do not have enough skilled nursing or senior housing facilities to meet the unbelievable demand that's coming, that baby boomer demand, right? Everyone's grandparents came back from the war and had families. I mean, my dad's a dozen kids in his family. And that dozen kids, you can watch them, like, they're all now approaching 80. So what you see is this demand going parabolic for senior housing, but it's so hard to bring those assets on. So we think that demand-supply mismatch is a really compelling business momentum perspective. But if you look at the valuation, they are extremely compelling. And we love the setup of cheap stocks with improving business momentum.
And why does a global approach to infrastructure really matter? And what opportunities can be assessed by looking globally that you would miss if you were just focusing on one country, one region?
Yeah, so we're hunting value where value exists. And in 2024, value existed in U.S. utilities. You wouldn't believe it today looking at the valuations of them. But the market had a very negative impression of them. But coming into 2024, we love that value case. but we also love what we're starting to see on the electrification and the power demand side. So as we enter 2024, cheap valuations were met with increasing demand, and that led to very robust stock returns. However, as that valuation really rose throughout the year, we decided to recycle that capital into Europe, where you saw extremely depressed valuations, but signs, early signs that you were starting to see deregulation come through and you were starting to see more favorable backdrops for those companies. So if we were just stuck in one geo, we wouldn't have that opportunity to bounce around to where we're seeing that unique combination.
Powering this overall AI theme is infrastructure. So where do you see this trend evolving, not only now, but long term?
Yeah, so today it's an all-out race to get the electron, to get the power to power the data center. And you're seeing, existing power gen facilities getting signed up by the hyperscalers. You're seeing them really cobbled together as much generation units as they can. However, we think that is going to transform into a longer duration, more sustainable build out of generation. So from 27 to probably 32, we believe you're going to see a massive wave of new combined cycle gas turbines. These are really base load plus generation units. But I think what I'm most excited about is the nuclear renaissance that's going to happen in the United States. We fundamentally believe that 2030 on, you are going to see an amazing nuclear renaissance. And it is going to be large-scale reactors like what we have today. But I think, you kind of look at what the innovation is happening in the small modular space, the SMR space. That's what gets us really excited because of the safety components, as well as really the modularization. That means costs can be contained and they can be deployed in different areas.
Will this revolution be driven by necessity or opportunity?
So I like to talk about AI as not the field of dreams, right? The field of dreams are like, if you build it, they will come. We got to build it because they're pounding on our door demanding it, right? And the demand is built by companies like ours, like yours, like mine, like everyone watching. They're all driving efficiencies through their business by consuming AI tokens, et cetera. That efficiency gain is requiring more power to get it done. So we believe fundamentally that we are chasing demand. And I love being in that situation because demand is exceeding the amount of supply that we can bring on. Right now, we're actually using excess supply in the market, but we're going to catch up to that point, and then demand is going to be bumping up on available supply.
Right, that makes sense. So, infrastructure, it's long been viewed as really a defensive asset class. So, how has this opportunity set evolved, and which areas offer the strongest mix of not only income, but you also have resilience and growth?
Yeah, so it's still defensive, which is fantastic. Infrastructure does provide that ballast in your portfolio, but it's clear that the secular tailwinds are new and they are driving changes in the businesses. So electrification is the one that we all talk about. You shouldn't sleep on deglobalization. That is a massive theme that we think has a very long duration. And that has a huge impact on local economies, whether it be the electrification side, whether it be energy infrastructure. Think of what we had over the past 3 years, 2 brand new conflicts that have focused on energy security. The United States has an unbelievable opportunity to build out its energy infrastructure to ensure that we have energy security of supply. So we think that you really have to find the themes, identify where the value is in those themes, and then position the fund to participate in it.
Brock, speaking of themes, we have space, which is emerging alongside as a theme to infrastructure.
Yes.
So does infrastructure extend to space? And if so, how?
Yeah, so it doesn't yet. Essentially, for infrastructure, there needs to be some sort of regulatory oversight. And right now, we could put satellites into space. I don't know if we want to. I don't know how much it would cost, but probably be pretty expensive. But the way we see the opportunity is buying the terrestrial infrastructure. So they've been left for dead. Some of these, the tower businesses are trading at like 20-year valuation lows. We believe that the SpaceX overhang is making traditionally very strong businesses now priced at very attractive multiples. The obviously bear case is SpaceX is going to replace towers. I can tell you that we do not believe that. We actually think it's going to benefit towers. And why is that? What is SpaceX good at? It's great at delivering data to rural areas. It is not as good at delivering it to urban or suburban areas. Cell towers provide unbelievable service to those suburban and urban areas. So those two could actually complement. You could have a SpaceX or a LEO satellite business provide that service, but then have to piggyback onto the terrestrial to serve those other customers.
Brock, thank you so much for your time and your insight. And thank you for watching Asset TV. That was Brock Campbell, Global Head of Research and Portfolio Manager at BNY Investments. I'm Erin Real, and this is Asset TV.